Hello, hi, it's Adil speaking, bringing you a review of the FTSE 100 European markets, global market analysis. Basically, a summation of yesterday's price action, 28th of January 2015, bringing you an intermarket analysis perspective as to what happened to the market, and why they sold off. Basically, this is going to be a very brief video, and I'll give you an insight into technicals as well. Okay, so fundamentals. Basically, we open up initially. Everything seems to be bullish outright because we had Apple earnings the night before, and everything obviously was considered to be bullish because we gapped higher, etc. But that certainly dissipated. And now, if you look at the Nasdaq, I mean, this is just an explanation of exactly what happened here. You can see that we've gapped lower. Then we had the Apple earnings, then we gapped higher. Okay, on the 28th. And we failed to sustain that move higher, and the market's obviously sold off ever since. So basically, that's the summation. So when you have a gap higher and it fails to sustain itself, and obviously you have a gap and go. So given the fact that you had Apple earnings, that was a perfect catalyst to close this gap up here at 4270, and that's exactly what I was trading towards, and that's exactly what I expected. And the market's failed to do that. Now, when the market's failed to do that, then it is considered to be very, very bearish. Okay, so what happened in the morning? Obviously, we gapped higher, Apple earning, etc. Everything was certainly bullish. Now, the reason why the market started to sell off because we started getting fears with regards to Greece. Okay, in the morning within Europe, that's one of the reasons why you could say that the Nasdaq certainly sold off from that perspective. So if you go back to our FTSE 100, if you look at Europe first of all, and basically you can see here we've got a H&S formation now on the 60-minute chart. Okay, 10-minute chart. So basically, we open up here, we gap higher at 6860. Now, obviously, based on Apple earnings, etc., and the market sell off very quickly. Why? Because Greece fears certainly starting to exacerbate. Talk of Greece pivoting towards Russia. Talk of Greece basically arguing with regards to its bailout program, so on and so forth. Okay, so those concerns start to obviously rise, and the market sells off. Then when we come to some sort of agreement or some sort of utterances out of Europe stating that there is going to be a compromise XYZ, etc., etc., then the market starts to short squeeze higher. Okay, and obviously expectations of the Fed being dovish, again that triggers off a short squeeze. Apple earnings strong and Boeing earnings coming in well. Basically that again triggers a short squeeze. And overall, obviously, the ECB put that's in place. That again triggers off a short squeeze too. Okay, so all those factors put together basically triggered off a short squeeze towards a close, and it was quite an impressive close as well, especially in the FTSE. And as you can see, the German DAX, we did sell off, obviously, in Greece concerns, etc. Then the markets basically neutralised all those concerns by finishing back to break even, basically, back at above 10,700. So quite impressive, very, very impressive from that perspective. Now, given the fact that we've negated Greece, got concerns with regards to Greece and basically their ability to actually form a viable government that won't pivot towards Russia, which again obviously creates concerns because they do argue that they don't want to that they do not support the extra sanctions on Russia. So that again, that in it of itself creates a problem. Okay, that in it of itself is a concern with regards to the European framework. Okay, and then there was rumours, there was talk of headline. I mean, there's news, rumour, etc. Call it what you want. Basically, of to and fro. Initially stating that that the government itself was initially interpreted as being a government that they can work with, that would compromise, etc., etc. And that's obviously that wasn't the case yesterday morning because headlines are coming out to the contrary, and then obviously the markets interpreted it as such. Even though we had German data that came out pretty well, but better than expected in terms of consumer confidence, etc., etc. Okay, so Apple earnings obviously being the key driver for the markets to move higher, and certainly gave back those gains very quickly. Now, with regards to the US markets, now my interpretation of the FOMC minutes were that they were neutral stroke dovish because they refer to inflation obviously going lower, and they also included international developments within that as well. but the markets interpreted it in a different light, and really it's the market interpretation that counts, and they've interpreted it as the Fed not being as dovish as everybody expected, obviously with regards to the drop in inflation recently and the durable goods orders and the inconsistency of the data, especially with regards to the Greece situation and the actual geopolitical concerns there. That obviously isn't the case, because as you can see, the Kiwi, the Aussie is getting smashed overnight. Obviously, the Kiwi certainly, the certain set RMBS, obviously the actual bank itself of New Zealand, RMBZ, basically is very very dovish from in its stance. Aussie very surprising with regards, especially given the inflation data better than expected, and obviously the euro is coming under pressure as well, which to be honest with you actually helps the eurozone. It's not a hindrance. It's actually helping and supporting the eurozone if the euro drops, because it makes the exports much cheaper. Okay, so that's basically what we're looking at from that perspective. So the Nasdaq, as you can see, and also the S&P 500 has flushed quite substantially. Now, if I just go to the actual S&P, as you can see here, we had this H&S formation. We have expected to have a short squeeze higher, and the markets gave back everything. Why? Because of the expectations, or the failure of expectations to be met, i.e. basically the concept of it being everybody expected the actual Miss Yellen to actually acknowledge the weaker inflation globally, and obviously to be more hawkish, or should we say more dovish than expected, and that's basically caused this sell-off. Now, I mean, that alone can't, from my perspective, I mean, given the fact that the markets basically were taking that in their stride, and as you can see, that was given the sell-off from the 2050 level down to a 2020 level, had more or less already factored a lot of that weaker inflation data in, from my perspective. And given the fact that we had this H&S formation up here, hit target, and now we have another H&S formation with this left shoulder here, head, obviously right shoulder. Now, a H&S formation at the bottom of the market isn't exactly considered bullish. Okay, so that's something else that you certainly need to take into consideration. So, but for now, I mean, the pivot here is 1992 and 1988 will be support. Obviously, if that fails, then you have 1970. And the story seems to be that given the fact that Europe is certainly benefiting from QE, and it certainly has an advantage there, the US markets are certainly being hammered or hampered by a weaker dollar. Now, we had stronger earnings from FB and Qualcomm, and obviously Facebook as well, and yet that still fails to materialize into stronger equity prices. So, as you can see here, daily chart, next level of support for this is 1991. If that fails, then you have the 200 MA. Okay, and with regards to the FTSE, give you a quick insight here. Again, 60-minute chart shows you an H&S formation, therefore indicating risk off, especially with the dollar higher. It's going to hurt commodities. Then you have a daily chart. Daily chart, we were holding this previous resistance equal support, which at 66775. That's obviously we failed to do that now, and the next level is now the 200 MA around the 6705 with regards to the FTSE 100. Okay, with regards to the German DAX, again, 60-minute chart is showing you a H&S formation, and the target being the 810-400 region. Basically, we're currently trading at the moment down 106 points to 10580, so I expect this potential pattern to play out as well. Although I wouldn't be won't get very excited with regards to this pattern, because of the actual QE that's behind the ECB. That's obviously being supported by the ECB. Will certainly potentially create more short squeezes. So that's again something to certainly think about. Okay, again, some food for thought from that perspective. Okay, so that's basically what happened. Initially, the markets were gapped higher on Apple news, then the market sold off on Greece news, then the market short squeezed on expectations of a dovish policy, and obviously comments out of Greece and Europe that we were going to strike a conciliatory tone, and also given the fact that the QE put is obviously there and active as well. Obviously, all those that contribute to a short squeeze, and then eventually the market sold off on a less than dovish Fed policy. Okay. Now basically at present it's all about the ability for the Fed to be hawkish or have a hawkish stance. Obviously not a lack of easy monetary policy, although Europe has an easy monetary policy, so this is going to be very, very interesting as to the push and shove. So technically you're a bullish Europe and you have a weaker US, and we'll see exactly how those two collide. Okay folks, so risk on, risk off, wax on, wax off. Goodbye now.